Alright, hope everyone's having a great Sunday. It is Sunday night by the time you're getting this video. Let's talk about my last video. I had two new potential trade setups, right? TRUP, which was not executed because the market never took out the high of the inside vertical bar here, right? So we'll get rid of that. No trigger traded there. But look at BG. Okay, this was a really good trade, and this turned out beautiful once it was executed, right? And it happened right in the morning. Look at this. So what did we say? We said we were looking for that inside bar. We had that inside bar, right? A lower high and a higher low from this bar here. Nail the moving average, closed up here, inside bar. I said if the market's able to take out the high of the inside vertical bar, that would be the trigger to get long. That high was 77.54, so we were looking at 77.64, okay? Let's take a look at an intraday chart on a 3-minute chart to see when you would have been executed and how that trade would have played out during the day. So 77.64 would have been hit right there, right here on the 9:54 bar. So 24 minutes into the day, you would have been long right here. Not a bad trade. Gave you an opportunity to enter if you didn't want to enter on a buy stop order. You had plenty of time to enter right in here. And as you can see, the market proceeded to move higher and gave you, two solid points at least, right? 64 went to 79. The high of the day was 79.94. So that was a good trade. If you day traded it, great. If not, you would still be long this trade. I happen to still be long this trade. I took something off because it was a pretty big range. What I also look for is I look at a 20-day ATR, average true range. So essentially what it does, it takes the last 20 days, high minus low, get the range of the day, take 20 of them in a row, add them all up, divide by 20. That gives you the average daily range, and also takes into consideration gaps. So that just gives you the average range. And so going back 20 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So it did not incorporate this huge day. So it ended about right in here. So it exceeded the ATR of the last 20 days. So once it started to exceed that, then I took some profits off the table. Right now the stop, I'm locking in about a point at about 78.64, and there you go. So that was a good trade. Let's take a look at the SSO trade. SSO still good. Remember, we took half of this trade off right there on the 12th of February. We kept the other half on, and look at the market took off nicely. So this is what I'm seeing, okay? Now we've gotten quite a bounce, right? We fell off from high down to low, hit that 200-day moving average and bounced considerably, okay? And the SSO, we bounced literally from 98.68 to 113, 13, 14, 15, 15 full points. If you were to look at the E-mini S&Ps, that's a few hundred points from when it hit. That's a huge move, 25.38, 25.60. So 200 points, which is roughly about 2,000 Dow point rally, almost in a straight shot. Once we got that double bottom on the retest right here, right? We tested it beautifully, tested the 200 and bounced. All right, so essentially we have run up. If you were to measure from this high down to low, the market nailed that 60% retracement and went through it a little bit. We're up at this upper average now. And if you take a look at where it closed, it actually closed slightly below the 50% from high to low. So the market did fall back a bit. So I'm going to watch this very closely on Monday. Remember, the market's closed. It's President's Day, right? So got a day off there. But Tuesday, I'll be watching the low of Friday very carefully. If we can start penetrating down through Friday's low, then I think we have a chance to move down a bit. Okay, I don't think this is going straight up, but again, who knows? Nobody knows if we go straight up, right? But all I'm saying is the first indication that we might get some accelerated selling is a clear penetration down through Friday's low. Okay, so we're looking at the E-minis on a continuous chart. Let's look at the day session. So I got to put a .D in there. So let's do this. We'll go at ES.D gives us the day session. Okay, so the day session closed even lower than that, right? Because remember, the at ES takes in consideration the night session as well. So let's look at just the day, the New York session from 9:30 to 4:15. We closed definitely in the bottom third, okay, which could almost, it's not quite what I call a blow-off bar, where it opens and closes near the same at one extreme of the bar. So market fell off there at the end of the day. And so let's take a look at the other indexes. Let's look at the Russell. Okay, close a little higher in the range, okay. The Dow, again, just like the S&Ps, lower in the lower half, lower third. And let's look at the NASDAQ. I don't know what's wrong with this, but okay. So again, that's what I'm looking for. Still long BG, that was a good trade. Still holding Twitter from quite a while ago, 16, whatever I told, what that price, 1660 or something. I'm still long. Tesla, still a good trade. I mean, look at that blowout. I mean, that really rallied. It rallied up to 343 and then reversed completely down and closing the bottom third of the range. So again, for the indices, the E-minis, the NASDAQ, the Dow, the Russell, kind of came back a bit. So I'm going to be watching the low of Friday. Again, if we start penetrating down to the low of Friday, I think we can get somewhat of a move lower. Do I actually think the market's going to fall off and come back down and retest? Again, I don't know. It's anyone's guess, but the first indication that we are going to start, the first indication that we're going to start seeing selling pressure is a breakdown through Friday's low. All right, so that's what I'm watching for. Have a great rest of your weekend, and I'll be back with you tomorrow. Bye for now.